Hello, I'm Tim Beggins, president of Elk Trading Company. In this, the midweek natural gas report, natural gas prices are lower. Currently, right now, trading 350 and two ticks, down 14.5 cents or 3.98%. Even though we have record heat in Dallas, in San Antonio, and maybe even in Houston, the outlook is for much cooler temperatures along the northern tier of the country, especially around the Great Lakes, Mid-Atlantic, and New England states. So, yeah, record temperatures in Texas, but cooler temperatures elsewhere are really causing some pressure on the market. Also, what's down in the last 3 days? LNG exports. The LNG numbers are down about B and a half per day. That's billion cubic feet per day. And this means that we also have some concerns for tomorrow's storage report. Expectations are between 111 and 115 as a net injection. This is almost double what it was last year at this time. So that's adding further pressure on the market. Let's take a look at the hourly chart. As you can see, we've continued to ease lower and are currently right now just hovering above the second pivot support, which is at 349. Below this will be 341.1. And it looks like we're going to possibly go and test that 341.1 with that storage report tomorrow. But the RSI is in oversold condition right now. So we have to be a little careful that we may hold here. Looks like we may get a down dip with the storage report tomorrow, and then let's see if we get some short covering going forward. Let's take a look at what the front to back spreads are showing. Today, we're looking at the Jan versus June contract here. And as you can see, it's up 4.7 cents or over 3.1%. Why? Because the prompt month is weaker, but there is still concerns about what upcoming summer, upcoming winter, and strong LNG export markets. But let's take a look at the Jan versus October. Same thing here, bouncing off of that support level here at $1. That's the break even for that spread and pushing back out toward the highs. Again, we are currently up on that spread, up 3.1 cents or 2.8%, currently trading 110 and a half. So right now, what's going on? Well, look at the WTI. WTI continues to push a little higher with the pause in the China-US tariff war for 90 days, but it is still below its really now resistance level, which was support for the last 3 years. So we've got to get a strong uptick here in crude oil. Otherwise, it will signal that the global economy is weaker than expected. So we've got to be a little careful about it right now. That will also play into how much associated gas will be coming out of the Permian region as we go forward, because for marginal oil producers, that barrel is about $65 for break even. So let's take a look at a snapshot here of ERCOT. As you can see right now, ERCOT is expected to push almost 81,800, almost 81,415. That was the day ahead forecast, but now currently expectations are a little bit over 80,000. This has been pulled down from 84,000 just a few days ago. And we do have very high solar and wind output expected for this afternoon, over 41,000. So over half of the demand in ERCOT at one point in time later this afternoon will be served by renewable energy. And the battery energy storage resources, well, they did not distribute power into the morning breakfast run around 7:15 to 8 o'clock in the morning. They're waiting for higher prices later on this afternoon, which are expected to be about $150 to $160 per megawatt. Let's take a look at that weather. As you can see here, this is for the US. This is the GFS model run here. The hot temperatures, as you can see here for today and tomorrow, and then it expands across the southeast up toward the Great Lakes. But as you can see, just right now here around Saturday, there's some cooler temperatures start to sneak in around Canada and the Great Lakes area into New England and parts of maybe the mid-Atlantic states. It does look like it stays fairly warm across the southern tier for at least the next week, but that this may not be enough to offset the lower LNG export markets at this stage. So let's take a look at the stocks for this week. As you know, we'd like to look at the oil and gas E&P sector. These are between $2 and $10 billion in market cap and have a high short float over 10%. And look what's added to our list this week, Apache Resources, APA. And currently, right now, as you can see here, let's take a look at what things are doing for the day. Unfortunately, they're down today. Currently, everybody's in the red, but let's look at the 1 week performance, and everybody was up. And that was basically because crude oil was rallying very strongly yesterday. Northern Oil and Gas was the winner here at over 20% increase for its price appreciation. Right behind it, APA, which is our new ad for this week on the stocks to watch. And let's take a look right now. We are actually below that pivot support here at 348.30, down 16.4 cents or over 4.5%. So let us know your thoughts in the comment section below. Please hit that like and subscribe button. Thanks for listening. We'll see you soon.